if you like to work out, that's a really successful fitness franchise. And there's all sorts of service franchises too, car washes, painting, deck restoration, downspouts and gutters, all that type of stuff. There's a franchise for all that stuff with much better profit margins, and that are also economically resistant to and COVID resistant, where they actually are essential businesses like Appraising was, which we were fortunate to have.
Originating from deep inside the Rocky Mountains, transported through the power of the internet, and arriving inside your tiny earbuds. It's the Appraiser Coach Podcast, helping appraisers increase their efficiency, quality, and make more money. Here's the guy who makes it his life's mission to create value for real estate appraisers nationwide. Your host and the Appraiser Coach, Dustin Harris.
Hey everybody, welcome back. This is Dustin Harris hanging out in the podcast chair. Once again, we have a great guest coming up, a repeat guest, but in a different light. Can't wait to introduce him. First, want to introduce you to three great companies. Of course, OREP Insurance. OREP is my E&O. Folks, I've used others out there. I'm telling you, they're the best. Check them out. It's OREP.org. That's OREP.org. Of course, we're sponsored by DataMaster, have been from the very beginning. Great company, saving you time, and that, of course, saves you money. Great tech. Check them out. DataMasterUSA.com. Again, it's DataMasterUSA.com. And of course, I'm using Alamode, and Alamode is a great sponsor here. You can find out more about Alamode, the #1 appraisal report writing software out there, at alamode.com or 800-ALAMODE. Well, I want to welcome back to the program a good friend of mine, previous mastermind student, and I'm going to have him tell a little bit about his background here in his bio, but his name is Matt Frentheway, coming back to us in a little bit of a different aspect. And again, I'll let him tell that story. Matt, welcome back to the program.
Thanks, Dustin. I'm happy to be here.
Well, it's a pleasure having you here, my friend. Yeah, I kind of set it up, kind of teased everybody. Tell me what's changed since the last time you and I spoke.
I think the last podcast you and I did together is about I sold my appraisal practice and moving on to a new phase of my life at that time, and now I'm in that new phase. Mm-hmm. I still live in Park City, Utah, but I've opened up 2 businesses since then. One is a boxing fitness business down in Scottsdale, Arizona, and the other one is a franchise consulting business.
Okay, and we're going to dig into that franchise consulting business here a little bit today. But for those listeners who may be new to the program, maybe have not heard your past episodes, give us a quick rundown, a bio of your history. And you said you sold your appraisal business. Set us up from the beginning. How did that transpire, and what's your background in appraisal? Sure.
Yeah, I want everybody to know that I'm just not some investment guy talking to you today. I'm one of you guys, one of the listeners. I've been an appraiser. I'm still an appraiser. I owned and ran an appraisal practice for several years. But really, it came down to, before I became an appraiser, I was an entrepreneur and had a few different businesses. One was I was a financial advisor back in the early 2000s, and I was an eyewitness to 9/11 out there in New York. I was out there for training for being a stockbroker and financial advisor, and that was a big pivot point in my life. I'd never experienced anything like that. I haven't experienced anything like that since, but it really refocused where I wanted to be in life, and that eventually made me become an appraiser. I wanted a job or a business that I could be at home with my family, kind of under the radar, so that I wouldn't have to be in New York on those type of things again. And I started an appraisal practice for several years. Back in 2004 is when I became an appraiser, and I eventually sold it in 2020, last year. But I also want everybody to know that I went through the 2008, the Great Recession too. And so I've seen lots of different economic cycles as an appraiser. And why am I here right now as a franchise consultant and another business owner? Why did I sell my appraisal practice? It was down in 2008 when the Great Recession happened that things got really, 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 really tough for my appraisal business. I think I was doing like 30 or 40 appraisals a month up until that time, and then I went down to 10, and I couldn't support my family on that. And so I vowed to myself that I would never be in a situation where the government could change rules or the economy could shut me down, and I'd be scrapping for income to feed my family again. And so I pivoted, kept my appraisal practice, but then I started looking into owning other businesses, and here I am today.
Okay, so let's lay the foundation before we get into some deeper discussion here, Matt. You have mentioned several times this term financial or franchise consultant. What is a franchise consultant?
So a franchise consultant is somebody that helps somebody that wants to buy a franchise business. I help people, or they help people find the right franchise to buy. And it's kind of like a real estate agent helps a buyer buy a house. A buyer has a certain price range they want to spend. They know how many bedrooms and bathrooms they want to have, what area in the city they want to have the house, and the realtor helps them find that house to buy. That's what a franchise consultant does on a franchise level. So at the end of the day, that the franchise buyer, basically owns their dream business instead of their nightmare. And the business is matched up to their lifestyle. It's got the hours of operation they want it to run in, how many employees they want, and things like that, just so that they, they're happy with what they bought.
So I assume that many of my listeners right now are listening to this and probably screaming at the iPhone or whatever they're listening on and saying, Dustin, we're so stinking busy. We can't even keep our heads away. You're talking about another business? I mean, Matt, what are we talking about here?
Yeah, I am talking about another business. That was one of the things that I learned back in the 2008, the Great Recession, is that I couldn't just rely on appraisal income because of that. And so I had to make it work. I bought another business, but I had to make it work. But it is possible to make it work, to own an appraisal business and have another business on the side. And maybe later we can talk about different types of ownership, but it is very possible to have a second business where you're spending 5 to 15 hours a week in it. And it's basically running itself and you're managing the manager. So I've done it before. I help people do it every single day, and it is possible.
Okay, so I want to challenge you just a little bit, because I know some of my listeners are listening to this. They're saying, Matt, I already own my business. I own an appraisal business. And I know you're not talking about an appraisal business. Just to be clear, listeners, we're talking about a second, maybe completely unrelated to real estate business, continuing as a real estate appraiser, continuing as a real estate business owner, but having another second or even third business, quote unquote, on the side that you're running. The question has got to be, Matt, you just said it's possible to own another business and spend 5 to 10 hours a week at that business and have it be successful. And most appraisers are saying, I spend 70 hours a week on my appraisal business and it's not successful. So how in the world is that possible?
No, that's a great question. So there's 2 types of ownership models, and most appraisal businesses are the first type. It's an owner-operator model, because the appraiser is often the technician in the business. The appraiser is going out there to inspect the homes, write up the reports, choose the comps, deal with revisions, things like that. They are operating the business every day themselves because they are the technician. That's their license. It gives them the technician. The other type of business that you can own outside of appraising is a semi-absentee owner, where you're not the technician. You have somebody else going out to do that work for you. And therefore you're just managing a manager, making sure those technicians are out there doing the job. For example, painting. You don't have to be the person painting a house. You can have a painter do it, and you can just own the business and make sure it's getting done. But appraising is kind of hard to do that because our license is tied to us being the technician.
Got it. Okay, so let's talk franchise for a little bit. Obviously, you're a franchise broker. Why would someone like an appraiser look to owning a second business that would be a franchise versus just starting it up on their own?
Well, here's the deal. It comes down to, if you start up your own business on your own, is it going to be less expensive? Well, you don't have to pay a franchise fee. You don't have to pay royalties, which you do with franchises. But how many mistakes are you going to make starting with that business? And how much money are you going to spend correcting those mistakes? And then you got to ask yourself, do you have enough time and money to weather that type of storm of doing it the wrong way, to figure that out? With a franchise, they already have proven systems, marketing plans, operation plans, and they have several locations already up and running that have been successful. So all you have to do is follow the roadmap and use their systems, which gets you on the path of success a lot faster than doing your own startup. And I would probably argue that it might be even cheaper doing it the franchise way than doing your own startup, because I've done both.
Now, I know enough about franchises to know that typical, especially successful franchises, they're a model that's been proven. I'm just going to throw out one that comes to mind: the Subway franchises. Right? There's more Subway sandwich shops, I believe, unless this has changed recently across the nation, than any other restaurant. It's because the barrier to entry is fairly low as compared to some other restaurants. But you've got spokespeople, you've got the brand name, you've got the product, you've got the system set up, but there's this huge franchise fee. Some appraisers are thinking, well, that's great, Matt, but why don't I just start up my own sandwich shop rather than buy into a franchise where I'm going to have to pay that enormous fee every month?
So part of the franchise fee, what you're paying for is to get those systems, those marketing plans, those operations systems, hiring systems, things like that. That's what you're paying for with that franchise fee. If you go ahead and do it on your own, try to copy Subway, you're not going to have national brand recognition like Subway has. You're not going to have local brand recognition until you've been in business for a while. You're certainly not going to really know what type of people to hire or how to fire them, or how to teach them to make a sandwich. You got to develop all those systems yourself. And how long is it going to take a person to develop those systems and get national brand recognition or even local brand recognition? And so paying that franchise fee gives you a head start, and you're faster to profit with a franchise than most startup businesses. So that's the argument for it.
Before we go to a break, I want to ask you one final question on this side, and then when we get back, I want to talk more about how this looks, how someone would actually find out more about this. What does it take to purchase a franchise? What types of franchises should an appraiser look at? But before we go to the break, I want to just maybe back up just a little bit. And I know you alluded to this earlier, but maybe answer the question even more poignantly, especially right now, as busy as appraisers are. Why look to a second business now?
The question, I run into appraisers all the time. They own second homes that they rent out. They might have other vehicles. They probably have stock in mutual funds. Why do they own those other investments? Well, it's because they want to have more pistons firing, so to speak. You have a car running, and if you only have one piston and that piston goes down, you're out of luck. What happens if you lose your license, or if you get incapacitated, you hurt yourself? Or the government changes the rules and says appraisals aren't even needed anymore. What are you going to do? This is a backup plan, a really solid backup plan, other than just mutual funds or owning other real estate investments. I think, Dustin, you taught me actually in our mastermind group several years ago, and I use this all the time. 1 is none, 2 is 1. It's the same thing here. Owning a franchise business on the side of an appraisal business is basically having 2 as 1.
That is awesome. I love it. We're talking with Matt Frentheway. He is a franchise broker, franchise consultant. And when we get back from the break again, Matt, I want to dive more into what this looks like. And is this even possible for somebody as busy as the typical appraiser right now? Speaking of being busy as the typical appraiser, how would you like to have more time? DataMaster will do that for you, folks. I want you to just think for a moment how many appraisals you are completing per month. Just get that number in your head. Now I want you to time that by 30 minutes and then just add it together. How many hours could a software program like DataMaster save you every single month? And more importantly, what is your time worth? How much are you paid per hour to do what you do? Folks, if you're not currently a customer of DataMaster, you need to check them out. Go to datamasterusa.com, find out if they are in your area. They probably are, and utilize them, folks. They will change your business. datamasterusa.com, datamasterusa.com. Alamote, of course, saving appraisers time as well with the wonderful tools, including the mobile app. Folks, it is the best mobile app out there. There's a couple others out there. Let's just face it, Alamote is the best. It will save you tons of time, not to mention all of the wonderful things like the worksheet and the addendum that you can detach from the report and the smart adjust and the comps database and the quick list. I could go on and on and on. Alamode is where it's at. There's a reason they are number one, alamode.com, or pick up the phone and call them at 800 Alamode. About 4 years ago, I switched over to a different E&O company. I was with a company for a very long time. They were fine. They were kind of out of sight, out of mind. But I was talking to reaching out to OREP, and folks, they saved me money. And the amount of benefits, folks, they're not out of sight, out of mind, because they are in your face with a number of benefits that you can have by being an OREP member. If you don't believe me, check out their website, go to orep.org and just click on the benefits tab. Just take about 5 minutes to scan through the different things that you will get at no extra charge because you are a member of OREP. It's orep.org. It's orep.org. All right, folks, welcome back to the program. We're speaking with a good friend of mine, Matt Frentheway out of, are you still in the Salt Lake Basin-ish?
Yep, I'm in Parsley. Yeah.
You're running a business out of Arizona, but you're still living up in Utah. Do you get back and forth to Arizona, I assume, on a frequent basis?
Oh, probably. I go there for probably a day once every 4 weeks to 6 weeks.
Gotcha. Okay, perfect. Well, we're talking today about franchises, and of course, Matt is an appraiser, still an active appraiser, sold an appraisal business in the last little while, and spends most of his time either running his boxing gyms or these helping people get matched up with second businesses. And Matt, we're talking specifically, of course, my audience is mostly full of appraisers. I love the fact that you've been an appraiser. You've been there, done that. And I want to talk about the question that I teased before the sponsorship, and that was, appraisers are working sometimes 70, 80 hours a week right now. I think the last thing on their mind, in fact, I think what's probably on their mind is make hay while the sun shines, right? They're out there working that tractor. They're trying to get that hay up and going. Why in the world would we look at a different business? I think you've probably answered that question. Why? Let's talk about how. How in the world does somebody working this kind of hours look to another investment like another business right now?
Well, to be honest, to start another business, the appraiser is going to have to scale back. I'll be totally forthright. I had to do it to scale back on the time they spend appraising so that they can open up another business. They might have to spend 40 to 50 hours a week appraising instead of 70 to 80. They might have to hire somebody to help them put the data in their forms, and everything that you teach people how to do, Dustin, with the appraiser coach, is probably what they might need to do to be able to open a second business if they're working 70 to 80 hours a week. But let me ask you this though. And by the way, I have a passion for helping people. That's one reason I'm on here. I have love for my fellow appraisers, and I know what it's like to put your nose to the grindstone every single day, make hay while the sun shines. But what if the merry-go-round stops? It's pretty scary to think about every night, and I'm here to possibly give an avenue for people to get out of that. So, anyways, getting back to what I was saying, 78 hours a week as an appraiser. When is that going to stop? When are you going to stop doing 70 to 80 hours a week appraising? Interest rates go up and the economy gets slow. You might have to spend less than 70 to 80 hours a week, but let's pretend the economy keeps on going the gangbusters like it is right now. And you have all the business in the world. Can you sustain working 70 to 80 hours a week your whole life? Do you have a quality of life doing that? Is your family happy? Are you happy? Do you get to do the things you want to? And if the answer is no, then something's got to change. And here is a possible answer to that.
Okay. Let's say that an appraiser is hearing this and saying, yeah, I've thought about this in the past. Maybe Matt's right. Maybe I do need to have some multiple streams of income, and this might just be the way to do it. Let's talk about franchises. Which franchises are best? I mean, most people, the first thing that came to mind was Subway, right? We think about food franchises, but there's so many others out there. Let's talk about the different types of franchises and what someone like myself, an appraiser, would look if we wanted to open up a second business.
Oh, I like that question a lot. So, when people think of franchise, the first thing they think of is, like you, Dustin, food service. I call it food service or restaurants. It's just in front of our face all the time: McDonald's, Burger King, Subway. But I found out that food service businesses or franchises are probably not the way to go for most people. And the reason why is because they're usually fairly expensive to open, and they have low profit margins. They have a lot of risk. The profit margins are like around 10%. Think of how many sandwiches you have to sell at $10 a piece to make some money doing that. And then look what happened with COVID. What did COVID do to most restaurants, or a lot of restaurants? There's just a lot of financial and economical risk with food service. So I don't work with food service franchises very much. I work with many other industries, wellness industries. I guess a good example of that is Massage Envy. They're pretty much sold out in the US, but that's one of the most successful wellness franchises out there. Orange Theory Fitness, if you like to work out, that's a really successful fitness franchise. And there's all sorts of service franchises too: car washes, painting, deck restoration, downspouts and gutters, all that type of stuff. There's a franchise for all that stuff with much better profit margins, and that are also economically resistant too, and COVID resistant, where they actually are essential businesses like Appraising was, which we were fortunate to have.
Right.
So that your income isn't hurt if there's a meltdown again.
Okay. So as you're consulting with an individual and I come to you and say, hey, Matt, I'm just a fat bald appraiser. I'm looking at possibly doing something different on the side. What kind of questions would you ask? In other words, direct me briefly, if you would, on obviously look at me. I have no need for health franchise. I mean, I'm as healthy as a horse. I look great. I look like a horse actually. But the fact is, do you steer them toward things that they like? Do you steer them toward things that are going to be financially best for them? I mean, what does the process look like as a consultant to direct someone to the right franchise?
Yeah, that's what I kind of got long-winded on that last answer to the question. But the short answer to the question is, what's the best franchise for people? It's the one that matches their personality and their lifestyle,
Okay.
The one that fits them. And that's where a franchise consultant comes into play. Is we spend probably an hour and a half to 2 hours on a consultation with our candidates, asking them lots of questions about what their lifestyle looks like, not just even their business. What does their life look like in 5 years? What do they want to be doing in 5 years? Do they want to be living in Costa Rica and be able to run their business remotely, or do they want to live in their hometown with their fingers in the business? Those are some questions that we ask. What do they want to do with that business in 5 years? Do they want to grow it and then sell it and open another one? Do they want to open more businesses and keep them for their kids? Build a legacy? It just depends on the person. And those are the type of questions that I get down to. Some other questions are like, what hours of operation do you want your business to run in? Do you want to have to wake up in the middle of the night to go fix something in your business? Or would you rather have a business that works during banker hours and no weekends, so you have your quality of life? And how many employees do you want to have? All that stuff goes into the equation. And it's different for everybody. And that's the job of the consultant, is to ask all those questions and really flesh out that information. I call it characteristics of a business. We figure out all the characteristics of a business that a person wants. And then the consultant goes shopping for the franchise for that candidate to find one that matches all those characteristics.
Twofold question, Matt. How much does a franchise cost? I mean, I know that's probably as silly as asking how much is my home worth. There's so much that goes into it, but in general, I'm sure my listeners are thinking, okay, I can see what Matt's saying, and I can see the need for that, and the idea of digging the well before I'm thirsty. I can see opening up a second business, but how much is this going to cost me? And the second part to that question is, can you finance something like that?
Contrary to popular belief, franchises are affordable. There's over 3,000 franchises in the United States. Some of them start as little as 5,000, and some of them are well over $1 million. The ones that are the best opportunities that I've identified, they usually range between $80,000 and $350,000. Okay. The sweet spot being like between $100,000 and $250,000 is the cost that I usually help people with a franchise with. So they're not millions of dollars like a lot of people think they are. And the other cool thing, they're like a house. You can get a loan on them. You can borrow money from the SBA or the bank. So you can leverage financing just like you can a real estate investment to open that business. SBA usually requires 15 to 25% down, and they'll finance the rest. And so imagine the rate of return on your cash on cash with a business like that. And so the barriers to entry are a lot lower than most people think. Some other ways that people can finance franchises are they can use their actually 401ks or retirement plans. And I'm not talking about pulling the money out and paying penalties and taxes and all that stuff. They can redirect their money into buying a franchise, and it stays under the tax umbrella of the qualified plan. And that's the way a lot of people finance businesses. Also, some banks will also lend against people's stock portfolios to spend on buying a business as well. And then, of course, you always have friends, family, and partners that can help you buy one too. But there's many financing options, though, to open a business, and they're not that expensive. What's a house these days? At least in Utah, if you want a house that's going to fit a family of 5, you're going to probably spend $500,000 at least or more. And you can buy a business for, $300,000. It's going to spin off way more money than a rental property will.
Interesting. Yeah. And correct me if I'm wrong, but I assume when you're looking at loans, SBA loans or what have you, I'm just guessing here, but I'm thinking that a startup from scratch would have a harder time getting financing than a franchise, because a franchise is a well-known model, correct?
Yeah, you're absolutely right. Banks actually have a franchise rating, kind of like somebody's credit rating. And so they rate franchises based on how successful the franchise is. And the higher the franchise rating is, the more likely they're going to lend money on that franchise, even if the person buying the franchise has zero experience in that industry. So yeah, it's typically easier to borrow money for a franchise than it is to get money for a startup.
If an appraiser, and I know appraisers pretty well, they're bootstrapped, they did this from the ground up. I can just imagine some of them are saying, great, Matt, these are awesome ideas. Maybe I should go get a franchise. Why in the world would I need a consultant? I'll just do it on my own. Talk to us about why someone would want to come to someone like yourself, Matt, and what the cost involved in involving a consultant, and really bottom line, yes, a business owner could probably do it themselves, but talk to us about why a consultant.
Yeah, a consultant. Well, let's use the realtor question. Why would somebody use a real estate agent?
Sure.
Appraisers probably don't have to use a real estate agent because I don't want to step on anybody's toes, but we probably know the market better than some realtors do. And we have access to the MLS, but the general layperson doesn't have access to the MLS, and they don't know all the ins and outs of an area and the houses and things like that. So for most people, they're going to use a realtor to get the best professional advice and the best buy. And the same thing with a franchise consultant. Can a person go out and find a franchise by themselves? Of course they can. But how much time is it going to take them to do it? And are they going to be able to, get the information they need? For example, let's go back to Orange Theory. I love the Orange Theory fitness concept, but just for an experiment, my fiance sent them a general inquiry saying, I'm interested in buying a franchise. It took Orange Theory 3 weeks to get back to her, and they told her, we're not selling franchises to people that don't already own an Orange Theory franchise. So, that's 3 weeks of lost time. You use a consultant, we already know that stuff. We can check territories for people and find out if there's availability there. And we just have a bird's eye view of the franchise industry and know the good opportunities. So we can save people a lot of time and money. And it doesn't cost the candidate anything.
What?
Consulting services are free.
Did you say not anything?
It'll cost them time, but no money. Consultants don't charge a fee to help candidates out. It's again, kind of like real estate agents work. When a candidate buys a franchise, the franchise pays the consultant a commission. And they do that because the franchise spends a lot of money in marketing and time trying to find qualified candidates. So when the consultant brings somebody to them, it works out that way. Plus the consultant gets the candidate the VIP experience too, a lot faster talking to the franchise, and the franchise takes that candidate a lot more seriously and gets the information they need to them a lot faster. Very cool. I'm hooked, my friend. How do people get a hold of you? They can email me, Matt with 2 T's, at learn2franchise.com, Matt at learn2franchise.com. They can also call me on my phone, 801-471-6068. Love it, my friend. Thank you, Matt. This has been very eye-opening. I hope it has given appraisers an idea. I know appraisers are just filthy rich right now. They've got all kinds of money in the bank, wondering what to do with it. This is a great option. Thank you, Matt. I appreciate you being on today. Thanks, Dustin. I appreciate the time again.
You've been listening to the Appraiser Coach podcast with Dustin Harris. If you like what you hear, please give us a 5-star rating and post a short review on iTunes. For more in-depth insider information on how you can make more money as a real estate appraiser, visit theappraisercoach.com and sign up for the All-Star team today. Thanks for joining us. And now, get out there and create some value.